Welcome everyone to Sunday Fuel, where we go over the sacred profit trades from the week before and the week ahead. This show is brought to you by Herman Miller, because why keep your money when you can have a better chair, a better back?
You like your Herman Miller, Tom?
I love my Herman Miller. I did get it secondhand because I was not going to spend $2,700 for a new chair.
But now that you've tried it, you're like, okay, well, I see why somebody would spend.
It's worth $3,000 for this chair. I sit in this chair and you're like, what kind of chairs would I sit in before? I feel like I was sitting on the ground on rocks before. I thought,
Yeah.
here's a chair. It's like, oh, this is amazing.
100%.
It also makes me think that clearly we're not of this earth naturally, because there's no position that I'm in that's comfortable, lest there's a $3,000 chair that I'm sitting inside of it. So clearly, I'm not a rabbit and not a bear. I'm not made for this planet, which makes a lot of sense. Peter, last week on Sunday Fuel, if you remember, we were at 78,000 on Bitcoin, falling and headed lower. We headed all the way down to 74.
The red wedding.
Do you remember what your boy, Sacred Prophet, said was likely to happen?
Well, counter to what everybody else was saying, which is it's going to go down. It's crazy. The sky is falling. You said we'd go up to what, 80.7?
Yeah, well, the weekly trade was that we're going to head from whatever 70. It was 78. Actually, let me pull up the chart here. 1 second. Let me just show. I mean, I just love making these victory laps.
You can pull up your tweet too.
Huh? Well, I'll ask you to pull up my Twitter because it's hard for me to. Actually, I'll just do both. Never mind.
While we're getting that set up, remember everybody, if you want to find out Tom's trades, you don't have time to watch videos. Sacred Prophet on X, Sacred Prophet. He puts out all of the daily and the weekly trade. So definitely a great resource for you.
Well, I was only doing that last week as an experiment.
Oh,
I got some feedback, and what people want is the chart with the levels on it and pointing out the trades on the chart, because it's hard for them to remember through the whole thing what happened. And I think what I'll be doing is sharing a permanent chart that people could go reference to, and I'll just put out the key, like, interesting moves if it moved up by some large amount or significant, because some of these moves at 1%, 2%, and maybe people don't really care. I certainly don't want to have to sit down on my chart and always remember every single time. And it was just a practice for the dashboard that's going to be coming, where you could have all this automatically anyway. So for now, definitely go out for the tweets. I'll put out the weekly tweets for sure, and I'll point out some daily tweets as they come along. But if you remember last week, and here, this is our bar for last week, we were at 78 and falling into it, and I was saying that the target for that week would be this level over here at 83.2. 83.2. I also mentioned that during the first day, there's likely to be a dip that would be the actual better entry for that weekly trade. This is something I've been noticing again and again, that the first day when you're in a bear trend and we're moving up for a bounce, that we get a dip. Actually happens the other way too. On a bullish, it'll dip, it'll spike up and then fall down. And those are the great entries. And in fact, if you don't get that entry, sometimes it's best just to let the whole day run out and wait for another entry in. But anyways.
So are we talking about the previous week now? Is that what we're doing?
Correct. This is the previous week. This is the week we just came up. That's everything from over here all the way up to today.
And what was your success rate there? Or was it accurate, not accurate?
Do I have, let me see here.
Can't you open and split view your X account so we can see what you called?
All right, that's a great idea. Let's put it up there. So this is the week. This is the last one I just did today. So basically, every one of the levels was successful. If any of these weren't successful, you'd see a red X. There's no red X's, Peter. We got exactly to where we needed to go. And so we got all these moves, these 4% moves. So that weekly move over here was a 7% move up to that level. So that's a 350% gain from where we from where I entered, which is pretty cool.
And with 50x, that can yield a.
No, that's what it is. A 7% move will yield you 350% gain on one position.
Wow.
Yeah,
I didn't know that.
Amazing. Yeah. I think in total, with my trades, I did something along the lines of 900% in total gains per position, which increased my portfolio value by 25%. Which is something I'm trying to get people to really understand, that the reason I'm doing the high leverage trades in the way that I'm doing, I'm trying to get the maximum amount of leverage that doesn't liquidate me out too often from my position, but that makes it so that I don't have to put as much money down. So for example, I don't have to do 50x. I could do, for the same amount of money gain, I could do 25x, right? And the moves can suffer double the drawdown. But then I have to put double the money in order to make the same amount of percentage gain. That make sense?
Yeah.
And because of that, I don't like those things, because I'm putting double the money down, and then if I do get liquidated on the trade, I have to make double the move back that I would normally do in order to get back to break even. I don't like that. Whereas when I'm doing the trades at 50x, I get to put 2.5% to 5% of my portfolio down at a time. And if I lose that 2-3 times in a row, I'm fine with that, because these trades that move up, 5, 6, 7%, it just completely recovers everything that I've lost and more. You know what I mean? Plus, the idea here is that we're always trying to get the perfect entry. We're trying to get as good of an entry as possible. And because of that, especially at the beginning of the week, sometimes you have to try 2 or 3 times to get the perfect entry in. And that being able to put that in at 2.5% at a time in my portfolio makes me sleep easy at night. I'm not sitting there with a large amount of my portfolio at risk, because I don't know where that perfect entry will be.
And you've said that. You said that if you can't sleep at night, you've probably put in too much.
For sure. If you can't sleep at night, you put too much. Well, if you can't sleep tonight because you're worried that your position will fail, you've put too much in. And what I love about the way that we do our trades is that we know what our profit target is for every single entry we put in. So I know that this weekly trade is a 7% trade, and if I could make 350% on that trade, then I know I could try. Let's say if I tried up to 4 times and the 4th time succeeded, well, then I'd be breaking even. So I can do 2-3 times and still be happy with the trade.
Right.
Okay. So that was the weekly trade. And so we started off over here. We headed even lower, just like we said. Didn't to freak out. And this was a great entry in order to get up to the weekly level. Even with this dip afterwards, it didn't really matter. Actually, what I did was sell off over here at the daily level, took a short down here. I covered over here. And so when it got down even lower, remember, folks, this is all near our 74 level, all near our yearly wave that we've been talking about. So I was perfectly fine with taking another position over here. Actually, I took it a little bit higher. I was fine taking another position here because I knew somehow the trade suggests that we should get up to this level. So when you're normally trading and you don't know where these levels are, you think to yourself that you're just like FOMOing into positions. You're just getting ripped up and chopped up down here, and you're putting stop losses and you're increasing your position and you're trying to recover. It's like a nightmare. Whereas I know I can just put a trade in over here, anywhere in here, and I feel comfortable because I know I'm probably headed up towards over there. If I lose that one position, fine. I lose 2.5% or 5% of it, fine. And if I do gain, I get 3 times of it back. So I'm fine with taking one trade, but then I only take one trade. You don't go in here and you're like, oh, you get freaked out, and you get liquidated, you get freaked out, and you keep trying again and again. That's straight to the poorhouse. You put the one trade on. If it succeeds, fine. If it doesn't, it doesn't. Now, what I thought was interesting, and this happens again and again and again, and after years of doing this in the markets, now I finally understand that I can count on these things. This, my friend, this candle here was the reversal of the tariffs, right? Well, first we have here the tariffs.
Well, the pause, Tom. 90-day pause.
Sure. Well, the reversal of the effects in the market.
Right.
So at first, when we're over here, the question is, this is the 2 weeks ago, people were all set. We're headed bullish. We're headed up. it's going to be blue skies. And I go, no, it's not. The chart suggests that we have not gone and cleared down the 74 level down here yet, which I've been hammering again and again and again. We haven't cleared it. So I know that somehow we have to get down over here. I don't know what it was going to be. It turned out to be Trump put it on the tariffs, right? So that happened, and boom, we head lower. And we didn't just head lower randomly, we head to the zone down here, okay? Why did we double touch the zone? Because we didn't actually clear our 74 level, right? Let me just actually pull this up on the chart so you can see it a bit. I'll just make it for the weekly. So again, this is for last week. We came down over here. And when we got over here, people thought, okay, this is the bottom, right? But we know that that's not necessarily the case because the 74 level has not been mitigated. There's still this zone, this gap here. So I know somehow we must get back closer to over here. It doesn't mean we have to touch it. Why? Because our yearly wave is getting close to crossing over it. And when that crosses over it, that also counts as a mitigation. So it's getting close. But I know that somehow the price is going to be pulled back again. Plus, we're in a downtrend anyway. We're in a downtrend. So when we got back up to exactly the daily VWAP level, which coincides with our downtrend, we reverse and we head back down to this area. Right? And so to me, it's like, okay, here I'm more comfortable in getting in because I know that we're likely going to head up to over here to this weekly level, which means that this yearly level is going to get pulled up. And if we stay above over here, it means like, and just as we're seeing basically today, our yearly wave is crossing over, mitigating that level, the 74 level, right? We're at right now 74, 145 on that yearly trend. So essentially that lower level has been mitigated.
Is that official?
Yes, it's official. I mean, it's as official as I'm going to like. It'll be more later on, but it's the thing is, it's been mitigated on a bunch of other Bitcoin charts,
right?
For different exchanges. I follow the Bitcoin one. I have done all my studies on this, my analysis on this. That's where I've been building my indicator. So that's the one I follow. And I mean, unless we fall literally down to over there today, which could happen. I would say it's mitigated, especially since we have our green trend over here.
Right. Wow. So
since we got 1, 2, 3 greens, the chances are we're going to get a red and or a yellow and then a fall down. So we'll see. We'll see how this goes. We don't guess. We just look at what the trades say. So last week, so we moved up over here. So this move up happened because there was this idea that the Trump tariffs were going to be reversed. And this was like, in the stock market, was like a 7 sigma move. Just this massive move. And you think to yourself, who could ever see this coming? Well, we can see it coming. We don't know what will cause it to occur. But the charts are suggesting that this is what will happen. This is what to where the price will go. And this is what I find fascinating. These sort of things, we never could see it coming. This unbelievable, what a credible move. I've seen again and again and again. I remember the first time, like I really was like, okay, maybe I should be counting on these, was when Gaza attacked Israel. When it did, the charts were suggesting that something was going to happen on October 7th around that time. I was like, what's going to happen? Let me see if I can actually see it here on the chart. Shoot, I forget. When was their 9/11? What year was it? I'm going to pull that up.
October 7th was last year, no? Hang on, let me check.
I thought it was the year before that.
It seems like forever.
I thought it was 2023.
It took place in 2023.
Yeah.
Wow.
So I remember here, October.
That's 2024. You're in 2024.
Oh, it's 2023?
Yeah, 2023.
Let's just go to. I think it was here. Yeah, I think it was around over here. So I remember thinking back over here, I didn't have all my tools that I have right now, but I did have some. And I was suggesting that the price should get down to this level over here. But it was just this up move that I was just missing, this entire up move over here. And then the charts were suggesting that this is where we would go. I was like, what's going to bring us down there? Oh, it turns out a new war in the Middle East. That'll just bring us right down to that level. And then once we got down to that level and got it mitigated, then the charts were suggesting, well, now we're going to move up from there. It's like, what's going to make us move up? But sure enough, we skyrocketed from over there. Where did this wick go, Peter? Where did that wick pop up? This massive wick, this unbelievable move to the freaking VWAP level, the weekly VWAP level. Could always count on these things. Anyway, so these things like happen again and again and again and again. A tweet from the Federal Reserve, a thing from Elon Musk, explosion in Turkey, China, whatever. COVID even showed up on the chart like this.
So what happens first? What comes first, the chicken or the egg?
Somehow, the aggregated knowledge of the charts paint the picture that something should occur around a particular time. So it's almost like the chart comes first, and then the event happens. You just don't know what the event is. That's why I always say I can't tell you why, but I can tell you when, where, and how. And that's all I can do. I'm not perfect.
All right.
So after this weekly trade, after the weekly trade gets done, folks, now our anchor, our certainty for the week is done. Right? Now we have to deal with walking through daily levels. And so that's why one of the reasons I've been doing the experiment of the daily levels, which we saw last week, where after this was done, what was the level I called? The level I called for was over here. From over here, the level I called was over there. So that was, what was it? That was April 9th to 10th. Let's see. April 9th to 10th was
78.5.
Here it was. Weekly trade completed. All right. So weekly trade completed. I'm only a vessel for truth. Do not worship me, and I still hold to that.
I'm only a vessel of truth. Do not worship me.
Yeah, I'm just a vessel for the truth. I just channel the information. I am not. I'm the way. I'm not the destination. All right, so what I was saying is that after that, the weekly trade, things get dicey. The 74 was never mitigated by the price, and our yearly wave is $200 away from crossing it. So there's still a small chance that we revisit the lows, but we didn't. The next unmitigated level is 96.4. That's the weekly level at the top. Bitcoin could rise 15% in the next week or two. So that we were talking about. So the next level we talked about was the 78.5, which was right over here. 78.5 is a level I was calling for on April 9th. Okay? That's a 4.5% move down. So that's pretty juicy, right? Because at 5x leverage, that gives you 225%.
And you
where
make
did the price
money.
go?
You make money going up or down or sideways.
Or sideways, exactly. The price went directly there. Do not pass go. Do not collect $200. Exactly to there. Okay? I'm just bringing this up to say the chart tells you what it's going to do. The chart tells you what it's going to do.
Well, your chart tells you.
After that, the next level up for the next day is over here. This level over here. Okay? So this level over here was 80. What was it? 80.7. What did I say the next time? After that was cleared. The 80.7 was there. How did you get in? 80.7. April 7th. Oh, I'm looking at the wrong one. Okay, so this level here is 80.7 was similar to one before. So I didn't bring it up again. Actually, I didn't tweet every single one of the days this week. But this level over here, this top level over here of 85 what was it, 85.3 is what I called for. 85.3. 85.3 was a daily level being called for. So I'm just trying to see it over here. I'm seeing, oh, there it is inside of my notes. So when we get past the weekly one, because it's not as certain, I was just talking about where the bias was. The bias was towards 85.3, which is exactly where we're headed. 85.3 is this top level over here. It's a daily level that was unmitigated. And so I actually held my short from over here, sorry, my long from over here all the way up over there. The reason why I don't sell, like, my target was that, even though the next day this level showed up, there's no real reason for me to take my profits over there because we're moving up from underneath. Remember? So if it came back down and bounced on that level, I might take out, I might even add to it because now we're in green levels. So as long as now I'm in the trend direction and I'm headed towards what is the nearest level up over here, there's no real reason for me to close my trade. I could just hold it all the way through, which is what I did. I ended up with a 425% profit getting up to this level. Then after that, I took a short over here. Yes, I took a short from over there. And the goal is the reason I'm taking a short over here is two reasons. I don't know, Peter, if you can pick up on this chart, if you're taking a look right now. Why do you think I would take a short from over here, and to where do you think I would be taking the short?
Because it dips before the weekly trade, and you would take it.
Well,
to
that's what,
80,
yeah. So there is
82?
a bias that we're going to dip before this weekly trade. Absolutely. What other reasons?
We cleared the top level.
We clear the top level, so there's no more nearby levels to call. There's no nearby levels to call, absolutely. And then we also have this level over here. This is mitigated. It was mitigated over here, but this level wasn't mitigated.
Right.
So we know we have to get back to there at some point. And then once this day closes up here, this level gets created, and that's also unmitigated. So the bias is towards this and then towards this to clear it. So I take my short over here. I come out here. I don't take a long here.
Right.
Because I still have this level to clear. I want to take a long over here. I have long order set up over here. And my short to cover over here. If I'm wrong and it bounces from over here up and I lose that, fine. I just lose actually I put on a full position. I just lose the 5%. No big deal. But if it succeeds, then I'll be making 3%, which is 150%. Right?
With 50x leverage or 25?
At 50x leverage. Only 50x leverage I'm doing. So that becomes a great trade if this completes, and if not, I just lose my my optionality. The thing is, we can't bet when there's no nearby levels. We can't bet for that. Always aim for the nearby levels. These are all nearby levels.
Right.
Okay. So now that was for the weeks, the trades for last week.
All right, just before we get to next week, I want to let everybody who's watching know, if you want to get these indicators on your charts, they're available for free. They're not officially launched yet. I think you have to contact Tom, Sacred Profit, on X, and I think he'll give you access to them if you're a good boy and a good girl. I don't know what the criteria are. They're completely free, and they allow you to see the charts like you've never seen before. So stay tuned. We'll talk more about.
You have to sign up as an affiliate for one of our exchanges.
Good.
But after that, they're all yours.
Awesome. All right, Tom.
As long as you're trading. In fact, at some point, if people are not going to be trading anymore for it, they're going to lose access. But let's leave threat.
Why would anybody? Why would anybody want it? And if they're not trading?
Because they don't like money. They don't like success. Failure. Quitters.
All right. Okay. I want to know what
acolytes.
I want to know what's coming in next. So the upcoming week.
Yeah. So we know we don't know. So the trade for the week starts. We'll know what that level is tonight at 8 p.m. We don't know that yet. So it's still 7 hours away. It's likely to be around this level over here, 79.9. So let's call it 80.
Wow. That's
a pretty hefty way down.
Yeah.
Right. So that is a trade that let's say we're where we are right now. That is 5% you can make on that trade. So that's 250% you can make at 5x leverage. Super sweet. Super sweet. Plus, these, I haven't actually explicitly made this into a rule yet, but the trend usually lasts for 1 to 3 days and then reverses, or stabilizes and then falls again. Let's see if we can see it again over here. This one's a little bit crazier, but it's 1, 2, it's a little bit of 3, stabilizes, and then the trend reverses. Over here, 1, 2, 3, stabilizes, and then reverses. So this 1, 2, 3 thing like seems to happen quite a bit. It's not an exact rule, so I find it very hard to state like that. But here it's 4 times, 1, 2, 3, 4, and then we reverse. So when I see 3 days have already passed, and we don't get a strong bounce off one of these levels, then I go, okay, maybe now we're gonna head to the reversal, especially since this is coinciding with the downtrend. This is our downtrend channel. And we have unmitigated levels, or one more over here, and there's no levels at the top to clear. Okay? Now, if that happens, and the level is at 80,000, which I don't see why it wouldn't be. The price would have to dramatically rise for it not to be 80,000. That would still be that would still be a long-term weekly downtrend. So let me just change our trend to week so you can see it. So now our trend is showing that we are in a bearish trend for the week. Right? We have to break above here and start making new levels up before that changes. So this would be confirming a downtrend for the week.
Right.
Okay. That's why I'm saying there's still a possibility, a tiny, tiny, tiny possibility we get down to these levels. I don't think so, because if we take a look at our liquidity indicator and we look at the trend on the daily chart, one, this rise up in liquidity is coinciding exactly with what we were talking about. I mean, exactly. Peter, remember this debate of what's the offset for liquidity for to track? And I've been screaming for 78 days for the longest time now. And to me, it was like essentially, on this period over here, it's exactly when it started going up. I just thought it was amazing that it happened exactly. Plus, over here, you'll notice on this downtrend that we've been following. I don't know if you can see this here, Peter. Let me make it a little bit clearer.
I can see it.
Perfect. So we have this downtrend we've been following, and we've been moving in and out of this zone here, right? In and out of the zone. And you'll notice over here that it kept being pulled back into that area, pulled back into the channel. It bounced over here, pulled back into the channel. It wicked up, didn't get through, came back down. It came back down to this level because being pulled, and it got whipsawed back up. So when you see that the pull back into a zone, either bullish or bearish, overshoots, it usually means there's so much upward pressure that the trend is breaking, right? And this, to me, this trend ends when we get to the yearly level over here. Now, our yearly wave, this only matters if we're still in a bullish trend, long-term bullish trend. The day that we break down below 74 or break down below the yearly wave, I'm going to be telling you now I'm looking for a bearish regime. We're headed to 40,000 on Bitcoin. That's what I'll be saying.
Right.
But until that happens, you can't front run that trade, because you'll always get the massive run up right when you're at the low level. Like, that's where you get the massive run up. So to me, it's no coincidence that it's around here that we got the break above that channel. This wick over here couldn't break above, right? It went up and then immediately got pushed back down. Over here, all these wicks tried to break up above, and it got immediately pushed back down. But it got pushed back down, grabbed the orders where it needed to grab the energy, and started moving up. So I would not be surprised that for the next day, that what will happen is that we will fall into the weekly trade. We'll fall into the weekly trade. So which will show up around here. We'll fall into it, maybe even a little bit further down, and then so that and then blast up, so that the candle tomorrow would be something like this. That I would not be surprised. where the candle at the beginning of the day, as we get down here, is fully red, and people go, "Oh my god, we're headed back down towards the lows," but then it closes up pretty violently above this trend. If that happens, this to me would confirm such a bullish move. It'd be hella bullish because now the here, which was support before, actually moves up to here. This becomes our support, and then we bounce off over there upwards. Plus, we need to gain energy to pass this trend, this yearly trend. Peter, I don't know if I've ever mentioned this. I don't think I've actually ever mentioned this on the show, but we've never actually gone through the wave indicator, and I won't go through it all right now. But I don't even know if you know this. But
wait, hang on, pause.
yeah.
Are we done with upcoming week?
Well, no. This is the last part I want to say for this upcoming week.
Gotcha. Go ahead. Go for it.
So we keep talking about the yearly wave, right, as a support level for bullish trend. But I've never actually talked about some of these other waves. And this one particular wave that I've been referring to again and again in different shows, but I haven't actually explained what that guy is. The wave indicator is not just your average move. It's just not your average moving average envelope. It isn't. It's volume weighted, but there's specific formulas set up to decide the different levels. And those levels go through 3 phases. There's the 3 phase over here where you see the 3, the 4 phase, the 6 phase, and the 9 phase. These are phase shifts for these time frames, which is why when I say the yearly wave, I started saying the yearly wave because if you actually just put on a yearly moving average, like a 252-day moving average on the daily time frame, you're not going to get the same level. So I got to start saying it in a different way.
Right.
These different levels are one of the things that were brought to me inside of my dreams for developing the system. And I didn't understand what they were. In fact, I didn't even have the names for these levels. I have these names for like a idea moment, segment, episode, period, shifts, day, week, month, year, lustrum, turning, seculum. But when I came up with the formula, I didn't even know about any of these things. What I got a dream, I coded something else, planned out the levels, and I was like, hey, what if I take this formula and put them into TradingView? And then it created this moving average envelope, which I guess I wasn't even really thinking about. I was going to create this envelope. And then when I saw how the price interacts with these levels, it made total sense. And when it just seemed like it was speaking to me. And then as I'm looking at it, I realized, oh, these different levels represent certain periods of time that are representative for an individual human being. So the first thing that jumped out to me was like the day, week, month, and seasonal average, quarterly average. They were sort of on, but a little bit off than what you would do if you just put on the quarterly average. But they were almost pretty dead on. I was like, okay, that's interesting that these 4 matched up. And then I look, I was like, oh yeah, the year matches up. And the one after that was like a lustrum, a 5-year period. I was like, oh, I don't know, like a 5-year period like even mattered. But that actually modified the charts. Then turn-in and seculum, which happens rarely, 20-year and 80-year cycles. And then it went down, shift. I was like, oh, this is a period that represents like a work day, like an 8-hour work day. Period is if someone would talk about a period within a day, they would talk about like this length of time. An episode, this was how long it takes to watch a particular show. A segment, how much is a segment on a new show? A moment, what would people consider to be a moment of time? And an idea, how long it takes to get an idea. All these, and then decision was even lower than that, which is the time it takes for someone to make a decision. So I was like, wow, these matched up. And then as I phase shift them out, through different bases. I'm not going to go through the math of it, but basically that's phase shift out 3, 4, 6, and 9. The 3 would give me sort of like sine wave shifts, whereas the 4 were seasonality. The 6 were cyclicality, and the 9 were long-term trends, which I just found to be interesting. And different charts respond to these different levels in different ways, and the study of which will take my entire life in order to fully realize. But suffice to say, this level over here, this is 86.5, represents the turning 3. And it's a very powerful level that the chart responds to quite often. It's going to be hard for me. I haven't actually modified it in such a way that you can only see that on the chart. I see it, blonde, brunette, redhead. But it often represents a the trend of the asset you're looking for, especially for Bitcoin. So all that to say that for this week, to me, another reason why I took the short is that I knew we were headed into that resistance. And we have to have enough momentum to cross it. And the only way you get enough momentum is that the price has to fall and then move up. The further it goes down and moves up, the more you get this, the liquidations, which we talk about all the time. We get the liquidations of the shorts that end up moving the price upward. Okay, so my bullish thing for the bullish case for me would be to see the price retreat to our weekly level, 4.5% down. Is that what I said? Yeah, 4.5% down. And then a close above this trend line. And if that happens, then I think we are near rocketing up to 96.4. If it doesn't happen and we stay within this channel, then maybe we get more of a sideways chop. We stay in this channel for a while and we bump out later on. And we'll see next week what happens. Okay, so for the weekly trade, it's going to be around 80,000. We'll see what it is when the candle closes at 8 o'clock. Or when 8 o'clock hits, and then, oh man, my short's being wrecked over here. This is another thing. If it closes above over here, it's even more bullish. But we do have to clear this level, so I far more likely that I think we're going to clear this level. There is one thing that's bothering me for the week ahead, and that's this level down here. You'll see it's not mitigated, the 78.2 level. Now I called this level cleared in the tweets because I always use a little bit of a buffer to offset it. So here I said 78.5 was the level I was actually looking at to mitigate that level. But when I looked, I saw that my script didn't actually mitigate it. I saw there was an itty bitty space here. And what am I going to say, Peter?
Charts doesn't like that. OCD. Got to touch it.
OCD, they do not like that. And we got a healthy bounce off of it, which makes me think, okay, Tom, it's just that your script is a little bit too dead on. But you guys will remember when we talked about it over here, it didn't like it, and we had to go back to retrace it, right? So this looked like it was a bounce off that level that was pretty solid, but we still had to go back and get it. And the thing is, the price, when these levels get mitigated, they don't usually get mitigated just like by a little smidgen. They get crossed.
Mm-hmm.
Like that's what normally happens. It's not usually, it's cross. It gets up here, it crossed down. Look, here it's the wick that closed above it. Like the high was above it, and then the close after, or the opening was below it. And so to me, this is not very satisfying, which means we could even get a drop all the way down to here.
That's what I would expect. In this market, that's what I would expect. What's the overall sentiment? Have you taken a temperature check?
Not all about sentiment.
Well, generally speaking, you say when everybody's on one side of the boat, you go to the other side. So your liquidation charts, doesn't that show, what does that show?
Well, before today, there was an idea here that, hey, because of this bullish move, and that this 74 level was cleared, I was like, the markets are suggesting a piece of good news should show up. That news looked like it happened today, where Donald Trump said that
he was no longer running for a third term.
No, where the tariffs are, that's not here, where the tariffs are not going to be on smartphones, on
right. Well, Apple. All smartphones?
Well, yeah, smartphones specifically, certain types of semiconductor chips or whatever, some exceptions.
Right.
And then they're moving from the idea of reciprocal tariffs to selective tariffs, I think is what we're talking about. I don't know. But it felt like this walking back of the tariff. So on Twitter, there's a bunch of these people going, hey, we're expecting this could cause a rip in equities come Sunday night. The futures would end up high. So that to me, if you're looking for sentiment, the sentiment is overall bearish for the American economy, but short-term bullish to recover all of the tariff loss. Basically, all the downward pressure because of tariffs gets erased. What that looks like, I don't know. But if you ask me for sentiment, that's what it is. I don't care about sentiment. I care what the charts are telling me. The charts are telling me we're headed down to this level, likely for sometime this week. It doesn't mean we can't do some amazing things up here, but it does it does mean that this is the target. And because this hasn't been mitigated, it makes me think that we get a massive leg down, potentially, then get back up. Now, the question is, when we get back over here, do we actually close above the weekly target and below? If we close below, then we're headed back down. And the case begins to talk about, hey, this is the end of the cycle. But if it doesn't and we head back up, it'll be hella bullish. So my slant, if you ask my personal FOMO slant, is towards the upside, a drop, and then upside run. I don't really care, Peter. I don't care at all about front running this downside move. You guys have never heard me say, and now I'm going to put on a position for the bearish case for Bitcoin. There's no point in doing that. When that happens, we're going to know. It's going to cross below that level. We'll take positions, and we're going to ride that sucker all the way down to 40,000. Peter, I could care less if Bitcoin goes to 40,000 or to 160,000. It doesn't matter to me. If it goes up by double or down by 50%, I'm going to make the same amount of money. I really don't care. I just like that it follows the levels it's supposed to follow.
That's because you're a high value trader.
I'm a high value trader. I might be the highest value one since I have direct contact with the Lord of Liquidity, but that's not because I sought it out. It's because I was chosen. Right. I would like to say that you guys can be chosen too, but I know all the chosen people. So how about we just follow what I'm saying here. Waves, we haven't talked about this, but waves are levels 2. They're not the same thing as the target levels, but there are places where you can expect support and resistance. And so getting up to over here to 91.6, like that would be attractive. And something like if we saw a blast up here to there, I wouldn't be surprised. I wouldn't be surprised at all. I mean, it wouldn't be from over here. It'd be from over here.
All right.
We'll see. We'll see what happens with the week ahead.
Watch this space.
Watch this space. Yeah. Our table is showing bullishness on the daily, but it's a very narrow bullishness. It's very, very narrow. So we'll see. Bearish on the weekly, moving towards neutrality. Bearish on the monthly, moving towards neutrality. And neutral on the 3-month. So
I do love this feeling that it doesn't matter where it goes. For so long in Bitcoin, we're like, we want it to go up, all-time highs, we want to make your money. But now it just seems like you're just watching the season of the show, and however it goes, and it'll be fun either way. Does the hero live? Does the hero die? Does the enemy live? Does the enemy die? Don't know. Show's going to continue. It's fantastic.
What it feels like to me is like, and this is what I always picture charts like. Someone throws a football down a flight of stairs, and everyone's trying to predict where the football is going to go. And you go, just look at the stairs. It's going to hit the stair again. So just go, it's near this stair, so just bet on that stair. Why are we trying to figure out where the squirrely thing is going to be bouncing all over the place? If you're right, it's going to be a guess. But for sure, 100% guaranteed, that football is going to hit that stair again. So that's what I find to be fascinating. It's just that this is a multi-dimensional stair that can fall up or fall down, and it can fall under the stairs or above the stairs. But when you think multi-dimensionally the way that I do, and I credit that very much to Back to the Future 1, 2, 3, allowing me to see things in a way different than normal people. I can make these predictions.
Fantastic. Well, exciting stuff. We got to keep watching this. Remember, everybody, that these indicators are free. You have to sign up as an affiliate for BitGet. Tom will tell you more about that in a moment. But these are free, and they do help you to understand what you're looking at. We want you to become a high-value trader. We don't want this FOMO and your feelings and all that stuff in this. Look at the charts. Look at the data. What is it telling you? And these indicators give you a leg up in that respect. So, Tom, if I want to get this, can I get it? These indicators?
Yeah. Message me on Twitter. At Sacred Prophet. Say, I'm not worshiping you, but you want the indicators, and I'll set you up. People message me all the time for them. I give them the indicators. It'd be great.
And you will be launching. The indicators and your I don't know what I should say or not say. So, but there's some
Yeah, the whole
exciting
point is that
stuff.
we're gonna have a dashboard where all these different signals, you're gonna be able to see them instead of a dashboard. You're not gonna be able to see some of the ones you might be able to pick out if you get the indicators. So it's always better if you have the indicators yourself because you can do it. But if you don't want to be the guy there, like having to sit down and analyze the charts, we're gonna have signals there. They're not trades; they're just signals to let us know what trend we're looking for, and then you figure out at what point you want to get in. We are going to have that, and that whole process is going to come with the ability to quickly register and get yourself these indicators added to your TradingView chart. But until that happens, I'm not promising when. It's going to happen at some point. Very interested for that happening. People are working on it right now. Until then, message me. Message me. You'll get the indicators. You'll sign up as an affiliate. It takes no time at all, and we'll be rocking and rolling. And soon we're going to have a private Telegram group where you'll be able to talk to me, where I'm going to actually tell you the things that I'm thinking about and some of the trades that I haven't tweeted out, because I only tweet out things that are certain. But sometimes, and Peter will notice, sometimes I get into trades that are just amazing that I don't tell people because I'm a little bit of a degen. That's what happens when you get drunk in the blood of the Lord. You know what I mean? Sometimes you see it gets some cookie stuff. So I'll take trades sometimes that are like home run trades that I don't really brag about, because it'll make you feel bad. But if you join the group for free, you can also participate as well. I just want to hear any belly aching if things go badly, right? We're in high risk states over here. But if you want to be a high value trader, you got to get some good game. You got to get some good risks there. And that's what I try to provide.
Do these indicators work for more than just Bitcoin?
I've optimized them for Bitcoin. Well, rather, my analysis has been optimized for Bitcoin. They do work on other assets. In fact, it looks like it works great on gold, looks great on equities, anything that is responding to large institutional movement. Remember, the basis for all of the indicators that we've been talking about on our shows is the idea that we're playing with institutional players, with large players. So Michael Saylor is buying into the market. Well, we want to travel in his wake. We don't know who the big players are, but there are big players within the market, and we want to be there. So some people trade smart money, and we like to trade wise money. TM.
Clip it, tweet it, ship it. Pretty good.
Write it, cast it, paste it, save it, load it, check it, quick. All right, I can't be too good, or we're going to get a copyright strike. All right, we'll leave it there for Sunday Fuel, and we'll be back next Sunday for even more. I was going to use some sort of prayer term for it, but I really don't want people to worship me. Like, honestly, it embarrasses me a bit when people say how good I am and how amazing how did you do it, guys? You can do it too.
This guy gets a Herman Miller chair, and now he's all hoity-toity, huh?
Sacred Prophet, brought to you by Herman Miller. Oh, my Herman Miller chair. So happy. My Mira too. I almost got the Aeron. I almost got the Aeron chair like an idiot. I don't know why I followed everybody else online. Aeron's the best. Aeron's the best. Have you seen some of the adjustments on the Mira 2? Super comfortable. I think if you're a short person, I think that's a problem.
Let's save this. I actually do want to do something where we do a segment where we talk about products and services that actually improve your ability to trade. You might not think that the chair matters, but I think it matters a whole lot. But we'll talk about that.
It does, because I have to pay for it. So making money really matters. It's like directly one-to-one with trading. All right, but for now, wish you guys happy trading.
That was a good one.